Hi, Alfonzo. This is Dr. Vicky. Today is Thursday. I wanted to take a few moments to go over your capstone project update survey and provide you some guidance. Thank you for completing the survey. Um, what is the working title of your capstone project? You put Disney. That is not a title. That's the name of your company. As I said here, I showed you an example. Using Google Analytics, Boeing frontline managers match expenses to revenue trends to increase net profit. That's a title that mentions the product, the company, and what it's going to do. It catches their attention. So the title needs to be catching and telling of what's to come. Communication services and entertainment, yes, that's correct as far as the industry and the sector. And when it says your overarching challenge is Disney isn't growing as much as previous years, where's your data that proves that? It says refer to BI solution example above, and it must be supported by data and or research and solvable with a well-defined specific business intelligence solution. It clearly says here that it must be supported by data, and you have Disney isn't growing as much as previous years. So remember, you'll be making this proposal to the executives of Disney. When you submit it to us, the panel to grading, it's as if you're submitting it to the executives of Disney. Would you actually tell Disney, I'm making a proposal to you because you're not growing as much as previous years? So you have to remember you're talking to executives that probably know more about the company than you do. So you have to use data. Okay? You have to use data, and there's data to be used. When you go over here to the Yahoo Finance, there's plenty of data to be found. Let's look at the stock, for example. You can see right here, I have the chart selected for 2 years. You have data points here, and what does that mean? You have the dates, which are data, and you have the stock price for each day, which is data. So you can see here, the high for the 2-year period was November 24th of 2019, and it was $151.58 was the price. So what's the data in that? The data is the date, 11/24/2019, and the stock price, $151.58. So this is a lot of data in one chart to be able to see what's been going on with Disney. And you can see right here, Disney's low was March 15th, 2020. And we know what that was. That was the start of the pandemic, the COVID-19. But it has since started rising again. So that's all data points, the dates and the stock closings. Okay, let's go to the financials. The first thing that came to my attention when I'm looking at the financials is first, every one of these numbers and categories are data. You have the category of revenue and the years, cost of revenue, gross profit, operating expenses, all of these are data, okay? And these are things that the executives and no one can dispute. These are published data that you must use to support any claim that you're going to make that there's a challenge or opportunity to be addressed with a specific business intelligence platform, okay? And I ran some quick numbers. What you do is you compare these categories, and you'll be doing that in week 4 of this class. So I gave you a Excel spreadsheet and everything for week 4, so you can go ahead and look at that. You're comparing year over year. For example, 2017 over 2016. The total revenue went down 0.8%. In 18 over 17, it went up 7.8%. And in 19 over 18, it went up 17%. So, now what does that mean to you as a business intelligence analyst right at this particular moment? These are high-level numbers. We do not have access to everything that's driving that revenue and all the different categories and all the different locations. As the actual analyst for Disney, you would have that. But we're wanting to make sure you understand what your role as a business intelligence professional is. When you're looking at revenue for an organization, revenue drives everything else, doesn't it? Without revenue, there is nothing. But there's other categories that should respond in a similar manner as your revenue. If your revenue is either flat or increasing at between 7 and 15% a year, then your net income should be doing the same thing, because that's what's left after your expenses. And in budgeting, all of the expenses are a percentage of revenue. So if your revenue is trending minus 0.8, which is flat, plus 7.8, and plus 17, the net income should respond in a similar manner. Okay, but net income in 17 over 16 was down 4.37%. And in 18 over 17, it was up 40%. But then 19 over 18, it was down again, 12.25%. So the net income is not responding in the same manner and in the same direction and trends as the total revenue. That's a challenge, or an opportunity, if you will. That's something that needs to be addressed. So what you would do as the business intelligence professional is you would take these numbers, you would put them in Excel, put them in Power BI, and run the visualizations comparing the increase or decrease in revenue for the years to the increase and decrease in other categories, such as net income. And so that you could see, like, say, lines, a line graph, that this is the trend of revenue and this is the trend of net income, when they should be following the same trend line. That's a challenge. So that's something, and that's a data-driven challenge. You're using the exact numbers of your organization. This is their blood work, if you will. This company went to the doctor. This is their blood results, their blood test. And you're going to help them see this. You're not going to make recommendations of what they should do to change it. That's for the business managers. You're on this side of the line. Business intelligence. You take the data, you put it in the right format, and you mix it all up. You find the insights, such as the revenue is not trending the same as the net income. You show them the visualizations. You give it to the decision makers. At that point, your job here is through. They make the decision of what to do to fix that, not you. Your job is the business intelligence side. Now, what we're talking about now is what could be a business intelligence proposal that you make to your company to solve this problem. Okay, not what should the company do to solve the problem, but what should they do with business intelligence to give them the information to do so. Okay, so now let's look at the balance sheet. Again, this is all their blood work and MRI and x-rays and everything that tells you the health of this particular organization, Disney at this point in time. Okay, all the data one could hope to have. Now, what I noticed here, now remember, we already know what the revenue increase was. It all starts with revenue, flat, plus 7, plus 17. Look at the assets. The assets are climbing. That's not a problem. The cash is climbing. Cash on hand. It should, shouldn't it? If the revenue is going up, that brings in more cash. That all looks perfectly fine. But when I go down here, I look at current liabilities, because I'm trying to figure out why the net profit or net income is not following the same trend as the revenue. We're losing the money in there somewhere. I'm trying to find out where. Under current liabilities, right here, these are bills that are due within 12 months. The current liabilities, look at the trend from 16 to 19 to 17 to 31. The current liabilities are increasing year over year at a far higher rate than the revenue is increasing. Let me say that again. The current liabilities, how much they owe, is increasing at a higher rate than the revenue is increasing, which is bringing less money to the bottom line. Okay? These are just certain things that I picked out that could be challenges. Database. This is data. Retained earnings. Retained earnings is how much of the revenue filters all the way down available to the stockholders, the people that own shares of stock. It's not doing as well as it should either. 66, 72, 82, all the way down to 42. So the retained earnings should also move in the trend line the same as the revenue, and it is not. And if it doesn't, then the shareholders will not be happy and they'll sell their stock and the price will go down. So you have several different areas that you can focus on as far as what the challenges would be. Okay, so to put that in context, what is the overarching challenge? If I had to say right off the top of my head, I would say, although Disney is experiencing a revenue increase year over year, anywhere from 7 to 15% a year, the net income is not following the same trend, with decreases of 4.3 to 12.25% a year. In addition, the current liabilities are increasing at a far greater rate than the revenue trend. So, what is the challenge? The challenge with that is Disney's frontline managers are not managing the expenses in real time to follow the trend in revenue. Okay, there's your challenge based on all of that. What is the preliminary business intelligence solution? Again, don't tell Disney what to do in their business model or their business plan. Their managers will do that from what you show them. You want to provide a sample of what a business intelligence software or platform could do to fix the challenge you've just identified. If they're not matching their expenses in real time to revenue to bring the money to the bottom line in net income and retained earnings, what could we do to fix that with business intelligence? Well, what you could do, right now you're working with Microsoft Power BI. For example, you could say, using Microsoft's Power BI platform, the frontline decision makers will receive daily dashboards in real time so that they can manage the expenses and make adjustments to reflect the trend in revenue, therefore bringing more income to the net income line and increase the retained earnings. So that is what a real data-driven challenge looks like and what a business intelligence solution would look like. Okay, so I hope that's helpful. Can't wait to see what you come up with.